announcement for the users, those who are utilizing our smart IT software. So that 1SD intraday as well as the positional with some enhancements, some more conditions, some more clarity on that method with some more logical means programming. We have just added it here. Previously it was the Fibonacci trend was here, so we have just replaced that thing with the 1SD trend. So if you are utilizing this tool, then please update it. Once you open the software, it will ask for update. Please update it so that it will come. So it will give you the intraday as well as positional, both the things you can able to do. So here if you go for the index future, since there is now the market is in the, you can say it means there is no market now, we are in the off market hour. So if you calculate and just go to this 1SD, so this is your death zone, whatever in the 1SD you have learned. So same thing we have given here. We have just added one cluster here where you can find out maximum resistance, where you can find out a major support. So these are the things, one cluster part is got added. So some more improvements we have brought in this particular things for greater accuracy. So suppose if you want to go for the positional 2 to 3 days or 1 or 2 days, so you can also utilize this 1SD things with some more enhancements in it. So if you are already using this tool, please update it. Once you will open the software, it will ask for the update, and that time you can update. So we'll now move to the today's session. Today's session is scheduled for Fibonacci technique. So many aspects of Fibonacci technique are there. So we'll be learning the most theoretical aspect of the Fibonacci technique, and end of the session today we will be also forming one option strategy for this particular month utilizing this Fibonacci technique. So that will come in the last part, though it was not a part of today's curriculum, but I'll just add this new things in that post Fibonacci analysis, learning analysis. Let us form one option strategy software, so strategy today. So that is what we are going to learn. So once again, good evening to all of you, and I'll start the session. So now today you are going to learn three broad aspects of Fibonacci technique. One is what is Fibonacci ratio, how many types of Fibonacci techniques are present, what is Fibonacci patterns. These three things we are going to learn today. So what is a Fibonacci ratio? Many of you will be knowing that Fibonacci ratio is 0.236, then 0.382, 0.618, all these ratios. But how these ratios are means derived? What is the derivation process of these ratios? So Fibonacci, it's a number sequence. It starts with 0, next is 1, then the third number is generated by adding the previous two numbers. So 1 plus 1 2, 2 plus 1 3, like this way the Fibonacci numbers are there: 1 1 2 3 5 8 13 21 55. If you said 55 means 55 is the addition of 34 and 21. So like this way you have all kind of Fibonacci numbers. Similar way, if I just put this one on the upper row, if I'll just put the Fibonacci numbers, upper row if I am putting the Fibonacci numbers, I'm just, and I'll just give a small color to it, and same way I'm just putting one lower row also, I am putting one Fibonacci numbers. So these Fibonacci numbers, whenever I will divide one Fibonacci number with other Fibonacci number, then I will get some ratios. So that division, whenever I will be doing, sometime I will divide position wise, the first Fibonacci number with first Fibonacci number, or the first Fibonacci number with the third Fibonacci number, or the first Fibonacci number with the fourth Fibonacci number. So by this process, whenever I will be doing the division, I'll get a constant ratio. So if you just see here, so here I have given one yellow color, one diagonal here, which is presenting 1. So this means whenever the Fibonacci number, same number divided with the same Fibonacci sequence. However, this certain cases it is giving you one constant ratio. Means when the 34 alternate numbers are divided, means the lower number is divided by its higher number, means 21 divided by 34, 13 divided by 21. So this is called as your alternate ratio. 0.618 retracement is known as your alternate ratio. Alternate number, whenever you are dividing, you are getting a constant ratio. Just see here one constant ratio here, 0.618. So after couple of steps, initially it will be 0.666 like that. After 5 or 6 steps, it will come to a constant ratio, 0.618, 0.618, 0.618. It will come there. Same order you got 0.236 also. One is alternate ratio, another one is, so when it means one step alternate ratio, two steps, so 0.236 is two step alternate ratio. The name of these ratios also are defined. 0.618 also known as a phi. Some books are written, they mention that is a phi. Phi is one of the Greek symbol. So like this they will be mentioning. So that is also 0.618. 0.236 is called as your two step alternate, means two step alternate ratio. So like this way, all the Fibonacci ratios which is present below this line of 1, below this line of 1, this diagonal, all are called are your alternate ratios. Above this, all these things whatever is there, that is called as your inverse alternate ratios. So inverse alternate ratio, one step inverse alternate ratio, two step inverse alternate ratio, like this way we named. So Fibonacci, my point of saying is here, Fibonacci ratio never limits itself a 0.236381, 0.61 or 1.618 or 2.618 or 4.236. It never end there. Many other Fibonacci ratios are there which we may not be taking for our analysis. Here 0.145 also is a Fibonacci ratio. 0.09 also is a Fibonacci ratio. 0.055 also a Fibonacci ratio. 0.03 also is Fibonacci ratio. 0.021 also is a Fibonacci ratio. So these are also known as your Fibonacci ratios. So Fibonacci ratio doesn't mean that you have only 0.618 as a range or 0.236. Many Fibonacci ratios are there. Out of that, only couple of Fibonacci ratio we are taking for our financial studies. So on those studies, whenever we are doing those studies of Fibonacci ratio, and whenever we are utilizing this ratio, this 0.618 is highly important for us, and many times we used to say that 0.618 to 0.786 is a death zone, and many things we are deriving based on pi ellipse also we are deriving from 0.618. Many things we are deriving from 0.618. So this ratio having known as your golden ratio or known as your divine ratio, in many books you can say that 0.618 is a divine ratio, golden ratio, all these things they have given. What is the concept behind this is, suppose if you are taking in a straight line and you are naming it as a and this is B and this is C. This, and if you are taking AB divided by BC. So you are just taking 3 points on a straight line and you are dividing AB divided by BC. It is exactly in the proportion of AC divided by BC. sorry, AC divided by AB. So this is also one proportion to 0.61 and 618 times of 0.618 times of AB. So what does it means? Sorry, for 0.618 times of the AC. What meaning it has? Based on this particular line concept, based on this particular theory of your line on Fibonacci proportion, based on this particular concept of your Fibonacci proportion, pyramid is got developed. Based on this particular concept of your Fibonacci line proportion, our all temple architectures are being developed. So whenever we develop any, I think I have just mispresented these things. This is your AB divided by BC. This is the correct way. Is equivalent to BC divided by AC, which is equivalent to 0.618 times of that length, where you have a line and this is A, this is B, and this is C. So based on this particular proportion, many of our geometrical objects, many of our civil architectures got developed. That's why it is very important ratio, and this is also known as your divine ratio. This is also what are the methods present and how we can utilize those methods for our trade. Fibonacci methods, whatever is present till date, they are parallel projection, growth projection, expansion, Fibonacci fan, arc and ellipse. These are the Fibonacci patterns. These three are the Fibonacci patterns, and these three are the Fibonacci numerical explanations. So whenever we are talking about a Fibonacci fan, so price time chart, this is a high we will be having, one low we will be having. So in detail I will not go to that concept. If you have my book on the Fibonacci method, you can learn that. So if from a high and a low, if you draw one line, Fibonacci fan, what it does, so it draws a triangle, and this triangle is drawn in this particular proportion, and post this triangle is drawn, this is from here three lines are being drawn. So three lines or Fibonacci lines are being drawn. One will be 0.236 retracement, one will be 0.5, another will be 0.618. So these retracements are being drawn considering one high and low of the previous trend on your chart. So this is known as your Fibonacci fan line, and this retracement of 0.236, 5 and 618, it is with respect to this line X and L. So if this is the high and low, low represents L and this is X. So this XL lines, whatever the price depth it gives, so on that 0.236, 0.5, 0.618 retracement we used to take, and this is utilized as a forward indicator. So here high and low already happened, now the price is ongoing level. So if you fix this indicators, whenever the price touches any of this line, then we used to find out it is finding out a resistance. Once crossover of that resistance, take it to the second resistance. Once it crosses this 0.618 retracement, we used to say that yes, it has all probability to go to the higher level. So this is what Fibonacci pattern of Fibonacci fan. Similar way, we can take a high and low, taking this thing as a diameter of a curve. Diameter of a curve. So here, so diameter of a curve, you form a arc. Diameter of a curve, you form a arc. First, initially, you have to take this full diameter as a arc and means a full diameter, and then you have to draw. Next, after drawing these things, you have to from the middle of this diameter, middle of this diameter you have to project a line, and you have to 0.236, 0.5, 0.618 you have to do, and you have to draw three different arcs in this particular levels, so that you can come to know different resistance. So this is on the those who are having the chat, they can able to chatting tool, and having this particular tool they can utilize it. And similar way you have a pi ellipse also. You can form a ellipse like a circle. The ellipse is one of the mathematical object which is having a major axis and minor axis. So this major axis should be taken from a high and a low. This major axis will be taken from a high and a low, and 0.618 times of this high and low should be taken, and whatever the value it is coming, that will be considered as your minor axis. And this ellipse, this particular geometrical shape, you have to put on your price time chart, and which will coincide with this high and low. And they said that whenever the price moves in this ellipse body or ellipse, any of this line which is forming this ellipse, those lines we can say that as the important supports and resistance. So these are the three patterns of Fibonacci. But this is if you have a tool you can utilize. Without that things you cannot able to utilize. Now coming to this particular numerical methods of the Fibonacci. So it has parallel projection, growth projection, expansion and retracement. Three things, four things are there. So Fibonacci ratio, as I told you, it starts with very smaller number, but for our capital market analysis we are utilizing 0.236, and we are going till 1. Post 1 we are going for 1.236, and we are going for 1.618. So these are inverse alternate ratios. Then 2 means this inverse alternate ratio. Why it is being named as inverse alternate ratio? This 1.618 is nothing but 1 divided by 0.618. 0.618. Same way this 2 is nothing but 1 divided by 0.5. So this is how you got this inverse alternate ratios. So 2. Beyond 2 also we have specific ratios. All Fibonacci ratio which is beyond 2 are told as known as the growth projection, growth ratios. All ratios which is from 0.236 to 0.618. 618, because 618 your death zone starts. So you will take the retracement till this level, then it is known as your parallel projection. And beyond parallel projection till 1 0.236 to 1, it is known as your Fibonacci retracement. Beyond 1 if you go till 1.618, it is known as your growth projection. So 1 is retracement from 0.236 to 1. Second is parallel projection. You only accept the ratio from 0.236 to 0.618. Once that is completed, then you have to draw one more retracement line from 0.236 to 0.618. That is called your parallel projection. If it goes above 1 till 1.618, you are accepting it as a growth, and beyond that anything is going for that is a expansion. So this is how you name the different ratios. So naming of those ratios happen in that particular way. So naming of those ratios happen in that particular way. So on this, once you understood these ratios and other things, how to use it, that is very important. So there are two different ways you can utilize this particular ratios. One is a static way, another is a dynamic way. In static way, you don't require the volatility. If you want, the volatility also should play an important role for deciding the trend along with the Fibonacci, then you need to say that method is a dynamic method. So the dynamic method is our creation. It is the smart finance creation. Static method, it was present before. Many used to say that no, static method is not giving that much accuracy. It is having only 40%, 50%, 30% accuracy. So what we have done, we have just accommodated the volatility. The things what you have learned in the 1SD method, there we are accommodating the volatility. What you have learned in the volatility process also, that also accommodation of the volatility along with the Fibonacci. Along with all this principle of a parallel projection, along with the principle of expansion, along with the principle of your growth projection or retracement, you can accommodate volatility very nicely. So first static things we will learn. So while coming to the static things, suppose today, if you see the today market has opened at 8199.5. So I'll just take 1 hour. 1 hour, what was the price action was there? So we have opened at 9:15 till 10:15. What is the price it has giving? So 10 till 10:15 it was at a price of you can say 8162. During this 9:15 to 10:15 it has made a low of 8153. It has opened at 8199. So 8199 high. So here 8199.5 high, 8153 is the low. So this is the thing, it has created high and low. So now we have to take the difference of the high and low. So this is the 46 point of oscillation it has happened. Now what we have to do, this 46 point of oscillation we have to multiply with the Fibonacci ratio. So 0.786 and 0.888. These are also Fibonacci ratios. 1.236, 1.618. These are the ratios we got. Now we have to multiply these ratios. 46.5 multiplied with these ratios. So whatever the numbers it is coming, that we have to plot it here, and then the resistances will be derived from the low 8153 added with this one. So 8153 added with these numbers what you have. Why resistances are being derived from the low, why not from the high? What is the logic? Why the people say all the resistances should be derived from the low, supports will be derived from the high? Why? Why not the reverse? Have you ever asked these questions to anyone? I am asking this question to you. So why these resistances we derive from the high, from the low, and supports from the high? Sorry, supports from the high and resistances are from the low. Can anyone will give me the answer for this? What is the logic behind resistance? Comes whenever you don't have a value, you add on a value, resistance will come. So you take your profession, if you are a doctor, you are a good doctor, you are doing well, but your competition resistance are coming from your same fellow of doctors community who is also equally competent with you. Similar way, whenever you have greater value, once you decay, you need some support. So the value, you have a greater value, you fall, that time you require support. When you do not have a value, you add on, you meet the resistance. So this same concept we have also replicated in our capital market. So capital market also replicate the same idea of a living being, same philosophy of a living being in our analysis. That's why the resistances will be always from low, supports will be always from the high. The reverse nobody used to calculate, though we never ask the questions. This is being accepted by a majority, so we never ask the question. So this is the reason of calculating the resistance and supports from these two price points, not in reverse. Nobody ever has calculated the resistances from the high. Nobody have ever calculated the supports from the low. So none of the analysis has followed that. So that this is the reason behind that. Fine. So this is the static way of calculating. You have taken a price range of a high and low, multiplied with the Fibonacci proportions. Then after multiplying it with the Fibonacci proportions, you have added or subtracted from the from the low you have added and got all the resistances, from the high you have subtracted and got all the supports. Once you apply this technique, how you follow it? How you follow it? So whenever we are applying this particular technique, so from high it has started falling, so it has come to 8170, 8170. So enter to the death zone or 8181 level. It has given me a confirmation. I will sell here. Death zone it has entered 63. Death zone also entered. I will trail the stop loss and wait for a further fall till 8124. If it doesn't happen and bounce back, then I my trailing of 8170 will be trigger. Else I will be putting my final target as 8124. And once it is coming in that level, then I have to, or if it is reversing from here 8163 level, once it is reversing, then what I'll say, this 8170 level I will close my trade and buy it here, and I will be aiming for 8189. So this is how I should trade if I am utilizing the static method. So this is just a price range you have taken from a particular high and low. Maybe last trailing 1 hour, maybe the first 1 hour of the day, maybe previous day's high and low. But this logic doesn't hold good in a real market because it will not obey the previous event what happened. So what we have done here, we have just introduced, instead of this price range, we have taken this price range out and we have just introduced the volatility. As per the volatility at that particular time, what is the price range is expected, and once that price range is taken, we have also discarded this high and low which was a trailing data, and we have taken what is the current price for reference, or what is the opening price of the day, or where it has stopped yesterday, the previous closing price. So the price reference is being changed, price range is being changed, kept the same ratio intact, and that you have seen a great improvement in the success of that particular method. So 1SD method or volatility method, you will learn 1SD method already you have learned. Volatility method for doing intraday trade you are going to learn in the future session. So this is how you should do. Now coming to how you can do this particular analysis and initiate a option strategy. So I'll be doing in a dynamic way, static way you have understood. So I am just going to do the same thing in a dynamic way. So dynamic way, whenever I am going to do, I'll be just taking the reference from, because I am not going to calculate the volatility. Whatever the volatility info is here, based on this info only I am going to take 1.23 is the volatility. 1.23 is the volatility, daily volatility. I need for 4 to 5 days period. So into square root of, because in the daily volatility, if you multiply the square root, so it is 5 days volatility is this one, and I have closed at 8157 level. So 8157 level, and I am just multiplying this volatility, dividing it by 100. So 5 days I am expecting a 224 point move. So 8157 added with this one, so I am expecting uptrend to continue till 8. So I am just expecting the uptrend to continue till 8157 I have to add. So 8157 I am adding 8382. Same way 8157, if I subtract this value, I'll be getting a value of this one 7932. If I get these things, then Fibonacci proportion will play a great role. So I'll be just changing the values here so that I can get some more clarity on this particular. So I'm taking the reference from 8157. So I need the, and here too also I am taking from 8157, and here too also I am taking the price range as estimated by me is 224 points. For coming 5 days I am going to form this particular strategy. So I have just copied and pasted it here, today's closing price I have taken. So these are the levels I have got. My death zone is coming here, 8,333 to 295. I may have a reversal. 8,209 is the uptrend confirmation. 8104 is the downtrend confirmation. I can think of doing a trade. Suppose if I want to initiate a option strategy here, very simple option strategy. Many strategies I can form. Out of this, many strategies I can form. If I am forming a simple bull spread and bear spread, I am at 8157 level. My trend confirms at 8209. So if I can form in this order by 8200 call, and my death zone is 8355, and it is also may take me to 8430. So one lot and sell 8400 call option, maybe two lots to reduce the cost. So same way you can also to hedge this if process. If you are buying buy 8100, put one lot and sell. Reducing the cost is very important. So sell some 7900, put option, two lots. But you have to be very careful. If the price moves above 8400, you have to close this strategy, come out. Our price is falling below 8000, 7900, you have to close the strategy and come out. Because if there is a huge move above 8500, losses may expand. If same way, if there is a huge fall below 7900, the losses may expand. So if it is consolidate between 8400 to 8200, maximum profit you can get. Consolidate between 8100 to 7900, that too also maximum profit you can utilize. Take it that as a price. Maybe this spread can be ratio bull spread or ratio bear spread. This ratio bull spread may be initiated at a price of some 40 to 45 rupees. This also within some 40 to 45 rupees you can initiate, with having a profitability near to 200 rupees, because 200 point gap is there, 200 minus 40. So your profitability may be coming in this particular range. This is one way. Second, you can also think of in this order. You can also think of in this order. Suppose uptrend breakout is given. Suppose uptrend breakout is given by the Nifty future. Also sell 8200 call option, one lot. 8100 put option, one lot. So that is you can sell and have some multiple 7900 put long. If it is crossing, this is a conversion, different way you are implementing the conversion strategy with put long. So if Nifty trade above 8200, so this also you can take limited risk. Limited risk, if it is coming to 17,900 level, you have to close it. If you make it as a delta neutral, it is well and good. Well and good. Or else what next you can follow. Or if you are getting one trend breakout happen above 8200, you can think of buying this one also, because you are having a reservation till 8300. Buy 8300 call option, multiple lots and sell future, and keep net delta at 30% or 3% plus 3%, net delta plus 3%. So this also you can form any kind of strategy, provided if that gives a breakout above 8200. If doesn't give and give a downside breakout, similar kind of things you can form in the put side. So this is how you can form many different strategies. But to my knowledge, the first one what I have told, it looks promising at this particular time. So this is how you can form many different option strategies along with this particular method. And as far as this announcement already I have done, one is the formulae is updated in our website, updated in our smart IT software. Those who are already using this smart IT software, they'll be, once you open the software, you'll be prompted with an update. Please update it so that you can take maximum benefit of this 1SD formulae in your intraday and positional trades. So this is what, as per the end of the day, it is coming tomorrow. If Nifty opens above 8215, you have a uptrend. You can have a death zone till 8291. If it is at 8157 level, it has closed today 8157.1, and 8157, it is just, this is the first target of this thing. So once it moves above that, you can buy. Once it is, if it is maintained tomorrow, what is the opening, we do not know. Based on the opening, you have to decide. So if it is still open below 8157, then just recalculate and get your new values for that day. So this is how you can utilize these things. And regarding the smart finance products and services, most of you will be knowing we have 10 to 11 products in our domain. So that comes through our academic products and software products. Academic products comes with the printed book along with some DVDs, and software products are real-time software products we have. So if you can say all these products separately having different price tags, if you are taking all together all these products, then it is being given with a discount price of 17,500. So the smart IT software, which has most of our software except our option strategy software, except this particular software, all our pair trade, intraday, positional, everything it has. So this software comes at a price of 8,500. So regarding the any product related queries, we have the phone number here. So you can call to our sales number here. So we will be answering all your queries. Any subject, and if I say why I have just bought this 8,200 call and sold 8,400 call, why I formed this 8,100 put and sold 7,900 put with respect to 8157 reference price, then that, because I have a uptrend confirmation above 8209, downtrend confirmation below 8104. So for that I am buying these two options, and my trend is maturing at 8,433 and 7880. So nearest strikes I am just focusing, and those strikes I am selling. So this is how, for that reason only I have formed this ratio call bull spread and ratio put bear spread. So similar kind of things, if you can initiate in the weekly price chart, and if you have a good consolidation in this particular band, then those strategies will give you very good profit. So based on that same concept also, we have formed this other